Hey, everybody, this is our first live stream here on the Grain Markets and Other Stuff YouTube channel. And this is kind of an experiment. I'm going to keep this short, but I figured as long as I'm doing an experiment and just kind of testing this out, I would throw some charts up on the screen and show you a few things that I'm looking at, especially as it relates to the position of large fund traders, the CFTC reports, that sort of thing. So while I'm doing this experiment, going live for the first time here on YouTube, I figured that I would at least put some content in here that maybe you'd be a little bit interested in. So we're going to do a piece where I'm going to run through the charts of how the funds are positioned in the corn market, the soybean market, and the SRW wheat market. And I'll give you kind of an idea as to what I think that means, what I think the data means, and how I like to use the data. And if you've been listening to this podcast long enough, you already have kind of an idea, I think, of how I like to use this stuff and what I do with it. But in any case, I'll run through this and we'll test out this live streaming thing. And if it works out, and I hope it does, we will do a lot more of this sort of thing moving forward. And what I'll do moving forward is I'll kind of schedule this stuff. I'll say in advance, at 7 p.m. tonight, we're going to do a review of the corn chart, the soybean chart, and the wheat chart. Or we're going to run through the fund positions, or we're going to run through the USDA report of the balance sheets. If this is successful and I can get this to work the right way, that is the game plan that we're going to go with. So this is these are the charts that I look at when it comes to fund positioning. Essentially what they are is they provide me with the net fund position according to the CFTC reports on a weekly basis. And I send these out to my customers every Monday morning, and we know exactly how the funds are positioned here. And it's a really good thing to keep an eye on. As I've talked about in the past, it has seemed to me, and I have data and the charts to back it up, that a lot of your premium grain marketing opportunities, some of your better chances to sell grain, will often occur when large fund traders have a very heavy long position historically. So let's cut to the chase here. This is how the funds are positioned in corn right now. And I don't know if you can see that full chart. Let's see here with the dates on there, if I can fix that. Okay, so here's the corn chart with the date. And this one goes back to 2015. And if you can't see this number here, as of last week, the funds were long 81,000 contracts of corn, net long. That's when you take their longs and subtract their shorts. That's where they're at. So you look back over the last 5 years, and like 81,000 here, that's a long position, but it's not a big long position relative to what we saw back here. This was the end of June 2019. They were long 178,000 contracts. Back at their peak here in 2018 in March, funds were long 237,000 contracts. If you make this chart a little bit bigger, you go all the way back in 2011 actually was when the peak fund long occurred. It was over 400,000 contracts in February of 2011 of all instances. But in any case, you can see that the funds are what I would call probably, I don't know, a modest long in the corn market right now, I guess. Historically speaking, it's not a super hefty long position. I would probably rather make sales when funds are at least a modest long in the market rather than when they're heavily short like they were down here in this neighborhood. They were short 280 or 290,000 contracts, actually 300,000 back in just mid-June. So I'd much rather do some marketing when they're up here. And of course, this move from where my arrow is here up to where my arrow is here corresponded, of course, with a pretty significant rise in prices. And of course, the goal here is to sell high. So this is one way for me to kind of track, give me an idea as to where I should be selling. It's not science. It's not foolproof by any means. It's one of a few different indicators that I like to use. We jump to the SRW wheat chart, which is this one right here. And the funds were long 13,000 contracts as of last Tuesday, which is pretty modest. But as you can see here, going back over the last 5 years, it's a pretty rare occasion that the funds even get long the wheat market at all. They were long, let's see, 59,000 contracts of wheat in February of this year. And that was a really good marketing opportunity in hindsight, looking back. This instance here where my arrow is, funds were long 65,000. And if you zoom this thing in a little bit, I think the biggest long that they ever had in the SRW wheat market was about 72,000 contracts back in 2012. So the funds, you can't look at all these markets the same. Like 100,000 contracts in corn is not the same thing as 100,000 contracts in SRW wheat. You've got to, and that's why it's important to have different charts for these different commodities, in my opinion, at least. Now, here's the one right here, the soybeans, that really sticks out. You look at this big line up. Funds have been building length in this market. As of last Tuesday, funds were long 211,000 contracts, which is a massive net long position historically. And of course, it coincided with a big time rally in prices. And, since this was posted last Tuesday, we've seen some selling pressure in the market. So that position, that 211 is probably back down to maybe 190 or 185, depending on which private group you want to pay attention to. And it's always kind of interesting because, this data is old by the time that we get it. So it does kind of pay attention to the estimates from the private groups. And I try to do that on a daily basis. It's interesting stuff for me to always watch how these large speculators are positioned. But in any case, so if I go back and look at the longer term version of this soybean chart, this goes all the way back to 2007, which is essentially where the modern record keeping began. You can see that there was only one other time, and of course it was 2012 and was it into 2013? No, it was just summer and fall of 2000. Well, spring, summer, and fall of 2012. Fund traders were long more than 200,000 contracts of soybeans. It's never happened in any other instance. So I look at this in a vacuum without any other information, and I would say, hey, we've got a marketing opportunity without a doubt in the soybeans right now. And you could have said that on the way up too. And I did say that. And that's why I've got early soybean sales on the books, because this has been in the midst of how I would define a marketing opportunity. I always talk about the boxes that I like to check. We've been kind of in that environment for a while now. But in any case, I think that the big fund long in the soybean market is certainly something to pay attention to. One, because it shows you that fund traders have driven up the price. They've been buying aggressively. They have helped to contribute to the run up in prices in the soybean market. The second thing, and maybe just as important, is that you've got risk here that the fund trader finds a reason to liquidate. And if they find a reason to liquidate, they've got a lot of length in the market that can be liquidated. So in the case of soybeans right now, even if it's the long is down to say 180 or 90,000 contracts, it's still a very, very aggressive net long historically. And it's a net long that for any reason at any time is subject to liquidation. Is it because China starts buying Brazilian beans and not U.S. beans? Is it because of some sort of political tension? I mean, is there some other wild card that we're unaware of? You never know what the reason's going to be, but there's always the reason, and this goes for all the markets. When these big funds get more aggressively long and more aggressively long, there's always the risk that you could see these large speculators just pull the plug. And it seems like, in my experience, when they liquidate, it happens fast. It generally is not a process that takes several weeks or several months. It can happen in the course of just a week, 2 weeks sometimes to unravel a real big long position. And you'll see the markets really collapse in that sort of instance. So this is kind of a review again, and this was kind of a test of this live streaming deal. And I hope to do more of this. I hope it's useful to you. And in the future, I'm going to schedule these so you'll know when the live streams are going to happen. And this is going to be a YouTube only thing. This is not going to be part of the podcast, but I'm going to try to get this YouTube built up. if there are some topics that you'd like to see me cover in one of these live streams, just reply in one of the comments or send me an email to info@standardgrain.com. And if there are some charts you'd like me to look at, if there is really anything that I can show you in terms of graphics, whether it be a chart or a graph or some sort of statistic that can help you with your marketing, I would be happy to spend a little bit of time and do it. I know one of the issues or topics that I'll probably bring up in one of these is spreads and carry in the market. And it'll be a lot easier for me to illustrate it on these live streams when I can actually show you charts and show you what's happened historically and bring that sort of stuff up. So that's definitely something I'm going to get into in one of these live streams. So I hope this was useful to you. I'm just kind of testing this out. I'm feeling it out. This YouTube thing is brand new. It's only a couple weeks old that I've been doing it. So I hope that this is useful. And if you have any feedback, if you have something that you'd like to hear, if you have questions about this in particular, or really anything else, just leave a reply in the comments. Be happy to get back to you. Everyone have a great day. We'll catch you next time.